merchant bank collapses of Florence in the 1340s is one of humankind's first well-documented banking crises. Today, almost 700 years later, it remains relevant to individual investors interested in learning from the setbacks of others throughout financial history. We'll start this fascinating account with its setting, Renaissance Italy, where the city of Florence emerged against all geographical odds to predominance. According to historian Richard Goldthwaite, Florence in the early Renaissance was not favored to become a financial or mercantile giant. Unlike Genoa or Venice, it was not a port. Unlike Siena, it was not a way station on major routes to Rome. How did Florence build its wealth? With a population largely engaged in textile production, Florentine merchants went north and west to secure access to raw materials. They also went east to sell their wool products. By 1300, Florentine merchants, such as the Peruzzi and Bardi families, had edged out competitors and established continental networks that led to their commercial hegemony. According to historian Edwin Hunt, the Bardi and Peruzzi of Florence became in the early 14th century the largest merchant bankers not only in Italy, but ever seen in all of medieval Europe. In many ways, they were an early form of the modern multinational corporation. Starting as textile manufacturers, they diversified into the commodities trading, and then into banking. The Florentine merchant banks operated dozens of permanent trading outposts and banking branches in widespread locations throughout Europe. Historian Richard Goldthwaite described that the extraordinary wealth generated by Florentine banking and manufacturing underwrote the city's many cultural monuments, explosive urban population growth, and also social mobility. You did not have to be noble to partake in Florence's wealth, as a porous class structure allowed for social mobility, particularly in the commercial classes. Commerce in Florence started dissolving rural feudalism, including social constraints. Historian Edwin Hunt showed that the golden years in Florence stretched from 1300 to 1324. The Peruzzi then focused on commodities trading, at a time when demand for imported grain was strong in the expanding cities of northern and central Italy. Although Peruzzi already had branches in France, Flanders, and England, its main trading area was actually Naples, where it bought grain, sold textiles and other goods, and lent money to the King of Naples as the price for selling goods there. These loans required large-scale capital, and thus the Peruzzi became a super company with many investing partners. If you were a Florentine citizen of means, you too could co-invest with Peruzzi, which became a partnership of about 20 partners with unlimited liability. About 60% of capital was supplied by Peruzzi, and 40% by others. The first to write about this crisis was chronicler Giovanni Villani in 1587. Villani wrote that the seeds of this banking crisis were sown in the 1330s, when King Edward III of England offered monopoly rights to Peruzzi and Bardi in the profitable wool trade, in exchange for loans to finance England's 100-year war with France. King Edward III borrowed heavily from Peruzzi and Bardi, but Edward III defaulted on his loans. Bardi and Peruzzi lost 1.75 million florins, a prodigious sum, reportedly leading to the collapse of Peruzzi in 1343 and Bardi in 1346. Until the 20th century, many historians took Villani's version of this crisis at face value. The image of a wily English king outwitting greedy Italian bankers was attractive historical drama. Other historians, however, disagree with Villani's romanticized account. Modern historian Edwin Hunt, building on earlier work by Sapori and Fried, showed that the financial distress of Bardi and Peruzzi is more closely connected with the geopolitical convulsions related to wars in northern Tuscany than with events in England. Further, Edwin Hunt showed that the Peruzzi loaned much less capital to Edward III than originally believed, as it continually recycled funds received in loan repayments, and probably also used funds supplied by local English investors. According to historian Marvin Becker, most merchant bankers in Florence, including Bardi and Peruzzi, had firmly supported the wars in Tuscany in the belief that acquisition of territories there would increase the security of their trade with northern Europe. But the high cost and poor results of this policy, added to a severe economic downturn, pushed both Bardi and Peruzzi close to bankruptcy. The final blow was delivered as the big merchants' regime was overturned in September 1343. Within a few weeks, Peruzzi declared bankruptcy. The Bardi did not succumb until early 1346. According to historian Alberto Sapori, the end of this crisis was not a complete wipeout for creditors. Final settlements were 37% of creditor claims on the Peruzzi and 48% on the Bardi. These fairly high creditor recoveries are inconsistent with the huge losses believed to have been caused by Edward III. A third Florence merchant bank, the Acciaiuoli, which had never lent money to Edward III, also declared itself bankrupt, and its creditors received 50% of their claims. Was this the end of Bardi and Peruzzi? Not even close. Historian Jean Brucker showed that the Bardi and Peruzzi remained among the wealthiest families in Florence into the 1350s and beyond. Political scientist John F. Paget and colleagues showed how, in the wake of the 1340s crisis, the most famous Florentine merchant bank of all rose into wealth and power, as the Medici Bank became the largest in Europe in the 1400s. And according to historian Richard Goldthwaite, the decline of Florentine merchant banks did not start before the 1500s, with the rise of Transalpine competitors. The bibliography we learned from to produce this video was written by historians and political scientists. All work is cited in this page, and we encourage our intellectually curious viewers to dig deeper for themselves. What do these sources tell us altogether? First, the academic consensus is that Bardi and Peruzzi did go bankrupt, but never liquidated. Both remained wealthy and powerful. Second, all investors in Bardi and Peruzzi lost significant money. Third, King Edward III of England had very little if not nothing to do with it. Historian Ephraim Russell considers the final review of Edward's debt to the Bardi in 1348, set at £13,000 or 87,000 florins, as derisory, not even close of being large enough to harm Bardi. And historian Anne Crabb confirms that Edwin Hunt convincingly disproved the myths that Peruzzi was centered on the wool trade with England, that it lent enormous sums of money to King Edward III of England, and that those loans bankrupted it. But despite all of this, the debunked myth that Edward III bankrupted Bardi and Peruzzi is curiously still propagated, in most if not all YouTube videos. There is even talk of a bank run, of which there is no historical evidence whatsoever. Back to verified history, several questions remain open. One challenge is that data are available from 1328 to 1331 only. After 1332, scholars must resort to estimates. Another challenge is that merchant banks cheated in their accounting to avoid taxation. But perhaps the most interesting, open question is, to what extent did small investors in Bardi and Peruzzi get expropriated? This could be perhaps one of the earliest cases of recorded minority investor expropriation. The main takeaway for today's individual investors concerns the allure of co-investing with the so-called smart money. Back in 1340s Florence, individual investors invited to co-invest with Bardi or Peruzzi probably felt flattered and probably took this as a low-risk investment. But the wealthy and powerful sometimes lose money too, and as they do, minority shareholders will be taken to the cleaners as well. The Bardi and Peruzzi remained wealthy. How about the individual investor? Thank you for watching. If you'd like to learn more financial history from verified sources, subscribe to our channel and join our community of individual investors who strive to learn from the misfortunes of others to avoid similar fates.